Hey everyone, it is Julie here with TipRanks, and today we're taking a look at a few big name unanimous strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Believe it or not, there are just 10 days left in 2023, and currently the outlook for the next year is pretty bullish. So today I wanted to find some stocks that felt the same, unanimous strong buy ratings. So I kept it pretty simple. I headed over to the TipRanks stock screener and looked for stocks with a strong buy consensus, and sorted by market cap simply looked for some solid blue circles here on the right. Impressively, there were a handful of stocks to choose from. So to narrow down our list to 4 today, we're taking a look at companies that had more than 10 buy ratings from analysts. We'll see how these stocks have been performing lately, what analysts are saying about them, and of course what they're predicting for the stock's future. You can follow along over on TipRanks.com or by downloading the TipRanks mobile app using the links in the description down below. Now let's get right into our unanimous strong buy stocks. Going from the least to most buy ratings today, we're starting things off with Halliburton. Trading under the ticker HAL, they're currently priced at $36.51. They have had some ups and downs this year. Overall, down 1% in the past year, up 17.5% in the last 6 months, but down 9% in the last 3. Halliburton is one of the world's largest oilfield services company. With a market cap of over $32 billion, they help provide the expertise needed to operate oil and gas wells, conduct horizontal drilling and fracking operations, maintain fluid pumps and pipelines, and safely decommission and plug non-productive wells. And that's just a glimpse of their responsibilities. They have an impressive track record of growing their earnings and revenue quarter over quarter for many years, and last quarter back in October was no exception. For their third quarter, they reported revenues of $5.8 billion and earnings per share of 79 cents, coming in 2 cents ahead of expectations. An analyst from Susquehanna recently increased their price target on the Halliburton stock. They noted that the firm raised their estimates, believing that the continued momentum across international markets in 2024 will lead to international revenue growth in the double digits for the company. Now, as I said at the start, Halliburton does have the fewest amount of buy ratings, but with 12 unanimous buys, it's still an impressive feat. That strong buy rating comes with an average price target of $50 per share, which would be an upside potential of 37% from current prices. Down below, we can see our most recent ratings coming in. On the low end, it's hard to really see as they're all double digits here. It's actually the 23.5% upside and a high-end price target of over 53% upside. Our second big name unanimous strong buy stock is T-Mobile. They trade under the ticker TMUS, currently priced at $154. With a market cap of $179 billion, they've seen some steady growth this past year, up 11.5%, including 11.6% in just the last 3 months. T-Mobile, of course, is a big name in America's telecommunications industry. They are America's supercharged Un-carrier, delivering advanced 4G LTE and transformative nationwide 5G networks that offer reliable connectivity. They are the third largest wireless carrier in the United States with 118 million subscribers. In their most recent quarterly report, not only did they have an earnings beat, but they also delivered the highest cash flow in company history and increased their future guidance once again. Service revenues of $15.9 billion grew 4% year over year, and the company reported earnings of $1.82, coming in 12 cents ahead of expectations. One analyst from Bank of America recently reiterated their buy rating, noting the company's operational excellence. His confidence is rooted in the company's consistent track record of delivering on its long-term guidance, a feat that has helped T-Mobile become a preferred stock among its peers in the wireless sector. They also reflected on growing optimism regarding the stability of the wireless industry as a whole, recognizing that the market has normalized post-pandemic without significant disruption from new entrants or irrational competitive tactics. The T-Mobile stock has gathered 15 unanimous buy ratings, and the average price target comes in at $186 for an upside of 20% from current prices. Looking at our list down below, we can see those recently reiterated price targets. On the low end, we do have a buy with an upside of 8.5%, and our high-end price targets go north of 30%. I believe it's our 33% here at the high mark. For our next two stocks, we're taking a big jump up in the amount of unanimous buy ratings coming in, over 30 ratings on both of them. Next up, we have Uber Technologies. Uber, of course, trades under the ticker Uber, or UBER, currently priced at over $61 per share. With a market cap of $126 billion, they've seen some phenomenal growth this past year, up 150% and up 38% in just the last 3 months. Uber is known around the world for their ride-hailing services. They connect riders to drivers in more than 70 countries and over 10,500 cities around the world. And of course, they've also made a big name in food delivery with their Uber Eats, which especially took off during the pandemic years. They did report an earnings beat in their last quarter, plus saw their gross bookings grow 21% year over year. Revenues grew 11% year over year to $9.29 billion, and they reported earnings per share of 10 cents, beating expectations by 3 cents. A 5-star analyst from JP Morgan reiterated their buy rating just last week. The analyst expects mobility and delivery demand to remain healthy in 2024 despite macro headwinds and for supply tailwinds to further aid Uber's growth and profitability. They believe that the S&P 500 index inclusion will attract a healthier investor base over time as well. The Uber stock has an impressive 34 analyst ratings, and every single one of those comes in as a buy. The average price target comes in at $64.48, and that would only be an upside of 5%, but with all the recent growth that stock has seen lately, it's not a big surprise, especially when we look a bit further back in our ratings here. Some of the older ones are buy ratings, but actually have downside potentials since the stock has already exceeded those price targets. As we look to the more recent ratings here in December, we see a lot more double-digit upside potentials, north of 13 and 20%. And fourth on our list today, probably not going to be a big surprise as it is one of the bigger companies out there. What is impressive is that it hasn't gotten one single hold rating. That is Amazon. Trading under the ticker AMZN, the stock is priced at $153 per share, and this is another tech stock that has seen phenomenal growth, up 82% in the last year and 18% in just these last 3 months. They boast a market cap of $1.58 trillion. Amazon needs little to no introduction as the world's largest e-commerce platform. The Amazon site welcomes over 2 billion visitors every single month, and this year they're expected to capture about 40% of the US e-commerce sales. And with sales like that, of course, their quarterly report came with some pretty impressive revenue. For their third quarter, they reported revenue of $143 billion, plus earnings per share of 94 cents, well ahead of the 58 cents anticipated. Recently sharing their opinion on the Amazon stock was an analyst from Roth MKM. They said that their positive outlook for the company is anchored in their financial performance in the coming years, particularly in terms of operating margins and free cash flow. They said that Amazon is a standout among mega-cap companies with projections for both accelerating revenue growth and expanding operating margins, despite predicting a general industry trend of muted tailwinds in the internet sector for the first half of 2024. Amazon has a ton of Wall Street analysts weighing in on their stock. They've accumulated 43 unanimous buy ratings. And with that strong buy rating, their average price target comes in at $180, which would be an upside potential of nearly 18%. And we have a ton that we could go through down here, a lot of them in that double digit. We could scroll a ways here. It would honestly take me a while to get to the bottom. On the low end, we do have some in those single digit upsides. More recently, some of our high end price targets go north of 30%, a couple here at 37% upside. So that is a quick look at 4 big name companies, all with unanimous buys from Wall Street analysts. Let me know your thoughts on these companies, and if you agree with the analysts or not. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just showing you what those Wall Street analysts are looking at, so make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.